time to convert into Naira? Or when is the time to convert their USD into Naira? Is it now? Should they wait until later? Or what's your thoughts on that?
Good afternoon, everyone. It's good to be here, and thank you for the audience. So to be very simple, to answer your question, the best time was yesterday, truly. You see, from the Naira market, you have investment options that you could earn as much as double-digit figures in interest rates, right? So sometime last year, we could see yields, particularly in the fixed income instruments, up to 22%. Even now, the yields are still in high double digits. So anyone who wants to move from that safety net, so-called safety net, should have done that yesterday. So it's not late to start today. The returns on investments in our local currency Naira far outweigh what you can get from the foreign currency. I'm not sure any bank or any of my colleagues here would be ready to offer as high as 7-8% on dollar investments. But from the Naira, you can get maybe as high as 18% yield if you are looking at fixed income instruments, or even from fixed deposits that are money market instruments. So it's a course somebody should have taken maybe yesterday. But it's not late. You can start today and do all those investments. Thank you.
Thank you for clarifying that for us. So as you heard, you should have converted from yesterday. So start converting your USD to Naira if you want to invest. Okay, let's move on to Mohammed. Hello. So I kind of have two questions in one for you. One is around digital banking. Digital banking has exploded in Nigeria. So for someone who does all their banking online, what wealth apps and features should someone be looking for to invest their assets today? And then the second question is, obviously it's Ramadan at the moment, so some people feel like Islamic financing is just for Muslims. Is that true? What's your take on that? Or can you clarify what Sharia-compliant investments are?
Thank you. Those are two loaded questions. I'll try and break them down as simple as I can. I'll start with digital banking and what it is. So a lot of people, everybody has an app, and we all think applications are for day-to-day transactions. But they actually are a lot more than day-to-day transactions. We need to start seeing our banking applications as wealth-creating engines. They are real wealth-creating engines, and that's why if I was in the market looking for a digital banking app, I would look for the kinds that would force habits. Rounding up my savings, moving it into different classes of investment, crypto, mutual funds like everybody has said, dollar-based investments. I will trade. I will look for the kind of apps that is so flexible that allows me switch from currencies. Look for the apps that give me more options and even equities. Those things exist. So the moment we start treating our application as real pathway to building assets, then we would unlock something greater than transactional value. And then on the second question, Islamic finance is not religious finance. It's not. It's kind of finance that is ethical and is asset-backed. Ethical in the sense that it's only looking for investments that are compliant with certain rules, and the rules are generic to everyone. Islamic finance doesn't want to invest in ammunition. We all know why ammunition is bad for us. It doesn't want to invest in speculative businesses because you can lose money. That's why it doesn't do that. It wants to invest in real economic assets. So today, Islamic finance only wants to invest in things you can see, feel, and touch. That's the basic things. So you see Sukuk, and Sukuk are simple bonds for building roads. We have them all around the country. And similar assets. So that is what Islamic finance is. It's not religious finance, and it's for everybody. And I can even place an argument that says the yield is sometimes much attractive. Thank you.
Thank you for clarifying that for us. Okay, Fola, let me bring you into the conversation. So VFD Group, they invest across various asset classes, financial services, real estate, technology. So beyond stocks and savings, what other instrument opportunities should everyday Nigerians look at? And how can the young entrepreneur balance investing with running their business?
Thank you so much for that question. And, good afternoon, everyone. I think the first question is that question, if you're not careful, you'll go into a debate whether you should be an entrepreneur or not. So this is what I would recommend. Entrepreneurship is a major driver of what most young people want to do today. And I think it's also because a lot of the literature we see tells you that the sustainable way to build wealth is through entrepreneurship. And this is absolutely correct. But the other side of the data that you should pay attention to is the fact that most new businesses, ventures, a significant percentage of them fail. And even those that succeed probably need some 5 to 10 years gestation period. So what that means is that whether you are in business, you're an entrepreneur or not, it's very important that beyond your own business that you're investing in and putting all your sweat equity into, you should also begin to look at some businesses that other people have built and created value out of and see how you plug into that value chain. That way you're able to address significant questions around multiple streams of income. You can also have a strategy where you break your portfolio or the available liquidity you have into different areas of investment. I know someone also says I don't have a lot of money, but I don't think it's as important as the fact that you're consistent. And the earlier you start, the better. If you, for instance, a simple analysis, if you start to invest, say at the age of 25, and you're investing about 100,000, you've invested 100,000 and the interest on it is compounding, whether it's in the money market or wherever you've invested it. By the time you are probably 40 or thereabouts, you would see some value in excess of 1.6 million. If you're making that decision 3 years ago or 4 years ago, you probably need to invest in excess of 300,000 every year. So what that says to us ultimately is that the earlier we're able to begin to invest, the more we're able to build capital, the more you're also able to develop capacity and understand the market. The beauty that consistency brings to you is that, for instance, if you are focused on the financial services market, you quickly learn that the market is a cycle. You now understand that there's sometimes that the value you are creating is in the equities market, sometimes is in the money market, sometimes is in the fixed income space. Sometimes it's in the right decisions you make around hedging against currency risk. What consistency does for you over a long period of time is that you are able to, after a period of time, have the staying power. That means you are not in a hurry. Maybe you have investments in the equities market, the market has dipped. You are not in a hurry to say, let me exit and count my losses. You are able to wait that period because, again, it's a cycle. And I've not seen in a long time where that cycle has been more than 1 year. Yeah.
Thank you. So just before I open up the floor to questions, I have one more question for everyone, and I want you to try and answer me in one line. So looking ahead to the next 5 to 10 years, where do you believe the next wave of wealth creation in Nigeria will come from? I'm going to start from Mohammed because you nodded, so you should have an answer.
The real sector.
What?
Real sector.
Elaborate, sorry, for the audience that doesn't understand what the real sector is.
So in general, we should all go and start businesses. Buy things, sell things, arbitrage, create stuff. That is where real wealth will come from. We need more of those.
Yes. I think similar response. If you just take a cue from, again, allow me to elaborate a bit. What the government intends to do over the next couple of years gives you an indication of where you should be looking at, right? Mohammed just spoke about the real sector. There's plans to, spend infrastructurally. There's plans for the economy to grow. In those sort of circles, a growth circle, which is what we are currently in, what you want to do then is get exposure to the real sector.
Well, I think we should also, I align with your answers, but we also look at the stock market, for instance. As you're trying to invest in the real sector, find out which stocks you could easily go into. And like colleagues have said, it doesn't matter how much you have. So with as little as 10K, 20K, you can start to also start building that wealth and eventually start creating it. So right now you can see the returns in the market are about double what you can get maybe from the money market. So it's time now also to start saving or accreting wealth from investing in the real sector, but go through the stock market. Look for stockbrokers, they educate you on how to do that. As little as you have, just start it today. You can never tell. Just like Olajimi said, in 5 years to come, you'll have created some wealth for yourself. Thank you.
Thank you, CJ. I think you took that out of my mouth. The channel to penetrate the market, whether it's the commodities market or where, is via the stock exchange. And it's either whether you're actively investing in the stock market, you're studying the market enough to identify that some of these businesses have not, reached their full potentials. When you compare performance against the, inherent value in those businesses. And there's also big opportunities in the digital economy, especially around fractionalization of ownership of instruments, as well as tokenization. These are key areas to pay attention to.
All right. I want to align with the previous speakers. Mohammed mentioned real sector. For me, I'll, in addition to that, say that not everybody is ready for the next 5 years. So if you realize you are not ready, what you simply need to do is plan for that future. And what you can simply do is try to save to now determine what you want to do, because very few people are truly ready for the next 5 years. Very few people. So what you need to do is save, put your money in investments such as equity market is doing, did as high as 51% last year. There's projection that it will do even a bit more this year. So if you can use that opportunity to, grow your wealth and also have plans, because I spoke about objectives, have plans to now determine the next 5 years what actually you want to do. And then you can now plug in to invest in the real sector. Thank you.
Thank you so much for clarifying that for us. So let me open the floor up to any questions.
All right, this time we'll be starting from here. Questions, going. Questions, you understand everything they said? Okay, it's here a sheet of paper, we are going to write a test. That's one question there, one question there, one question there, 3 questions. All right, thank you.
Yeah, so my question goes to Mohammed for the ethical investing. Typically, I feel I'm a little bit shortchanged when you compare to some other conventional financing. So what are the options for somebody like me from your perspective in terms of ethical finance? Thank you.
Sorry, I missed the question. He may have to just repeat it once more.
The options for me,
yes,
in terms of ethical financing that you can advise.
Okay. So typically, you'll go to a bank and want a loan right? So that's what normal people will do. But if you walk to an Islamic bank or a non-interest finance, they won't give you cash loan, but they'll sit down with you to understand your business and the business needs. One of two things would happen. Is either you are positive enough that they would buy you whatever you need and sell it to you where you pay them back, or they will take an investment point of view on your business. At that point, they are willing to go all in, share profits, share loss. There are different models, but every model with ethical finance is always going to be asset-backed, is never going to be lending you money to pay back with interest, but there are multiple structures that we work with. Thank you.
All right, so good afternoon. My name is Daniel, a student. So I want to ask now, looking at the trend of things in amongst youths, how everybody is desirous of having quick money, like the desire to have quick money, make money very quick, and everybody is now a social media content creator, doing everything just to make money, and then we find that wealth is created steadily. So how do we shape the minds of the youths? Like, how do we shape the minds of people to come out of that ideology of survivor, fast money? Because we find out that they make money, they go back, improved lifestyle, and then they are back to making money again, and then they are running around the circle. How do we break that circle?
Okay, yeah, good morning. My question goes to the CEO of Stanbic IBTC. And my question is this. It's a personal experience, and it's just, you guys are doing an amazing job, by the way. However, your onboarding process is very, very technical and extremely difficult. And I'm saying this because of my community. So I have a couple of people who reach out to me, hey, I want to invest, hey, I want to do this, do one or two things. And they come to me, and I have to recommend a couple of firms that they could use based on ones that are regulated by SEC. And the feedback I get, and then after getting those feedback, I had to go check it out myself. And I saw that, wow, this is really, really technical for people to come on board. And so it's counterproductive in the sense that you're trying to onboard people into this space. We're having conversations regarding financial inclusion and financial education. But if it's very, very difficult for people to come in based on your technicalities, I think it will be counterproductive. So it's not a question, it's just a suggestion and a feedback from the market that you could go back to the drawing board and make it much more easy for people to come on board. So that's just it, basically.
All right, good afternoon, everyone. My name is Bolaji from Providus Bank. I liked your suggestion on the real sector being where you believe people should put their funds in. But how do you advise people who are suddenly met with global shocks? For example, the war in Iran has impacted the oil prices now, which means that their overhead expenses increases. And also for the stock market, I'd like to also ask, we are not isolated. Our market too will also feel the impact of the global events. How do businesses and individuals reevaluate their investment options in light of this? Thank you.
Thank you very much. You can begin to answer. Anybody can take, okay.
So I'll start with the young man over there that asked the question on just jumping and creating wealth. Look, I think things happen in phases, especially when you're young. It's very easy to want to drive a G-Wagon, but you have to start from somewhere. There's something called capital formation, and it means you earn 1,000 naira, you save 200 naira, you earn 100K, you save 20K. You will consistently save, and then you will start investing. And God would bless you that the market will turn around like we are seeing currently, and then you have double-digit returns. That is how wealth is created. But you don't wake up to wealth. You have to be deliberate. You must plan, you must save, form the capital, invest the capital, and become wealthy. And it comes with a lot of discipline and consistency. Thank you.
Okay, I also want to add to this conversation. Okay, you know, everything about life, it borders on discipline. First off, you must have to be a disciplined person. And if you find disciplined people around you, they can mentor you along the right path. So from what you have said, it's not just you wake up today and you see so much money. Sometimes it can happen by some funds, and if you don't have the good mentor, you will filter those funds and you still come back to square zero. You know, there was a joke about some children, you know, some young boy who was asking his father to help him raise some money. So what do you want to use the money to do at this your age? Say he wants to buy a laptop. So what do you want to use a laptop for? He wants to do Yahoo Yahoo. Because he sees young people, you know, they just come by money, they live lavish lifestyles, and tomorrow the money is gone. So it starts from us, first of all. You have to have that discipline and just be sure within yourself that you want to create wealth. And then when you start to think and learn about it, you also know how to apply or allocate your capital. Just like you said, you have 10K, you have 20K. How much have you paid yourself? How much are you saving from it? And how much do you want to invest? Are you deliberately and in a disciplined manner watch that investment grow? And as it grows, you see that you are also making a better life for yourself. So it's not just a matter of money comes today and goes tomorrow. Or you see people who come by money suddenly, you don't know how they got it, and you want to aspire to that kind of life. It will never last, and you will never be happy.
Sorry, just to add to that. So for the young people, the example you gave, that how can we, the question rather, that how can we change that mindset? For me, I think continuous education is very important. A lot of investment houses are, they are already educating now. NAIRAMETRICS is one of the leading, education platform in Nigeria today that we have. What you can do, it starts from you. What you can do is point them in the direction of where they can get that education. Because it is when they are educated that they will not make such moves and make such mistakes. So continuous education, but it has to now be from one person to another. As you have been, everyone here has heard something today that has impacted them one way or the other. Pay it forward. Pay it forward by telling other people. And as you do that, you are also partnering in that continuous education, and then you won't know the effect now, but you will see it in the years to come, that it will actually help to address some of these issues that the young people are having currently. Thank you.
Sorry, before we go on to the Stanbic question, I just want to address that question as well. What you're describing is lifestyle inflation. So that's when you make quick money and you up your lifestyle, you make quick money, up your lifestyle. What people need to understand is that wealth is not built until your money is working for you. So people need to rewire their mindset to understand that wealth is built when your money is working for you, as opposed to quick wins that fast money can bring you. Because wealth is long-term, quick money is not sustainable. So once people understand that, it's easier for them to channel their mindset into understanding that wealth is a long-term game. Okay, so going on to the question specifically to, who was it directed to? Oh, to Stanbic, about the onboarding process. Why is it so hard?
I think it was a commentary, not a question. But the feedback is taken. I think I'll just have a chat with him afterwards, just to really understand. But we've done a couple of things over the past few years. But as you know, I think a speaker spoke about it. These things typically are gradual and take time as we onboard these new updates and get the process more streamlined. So I think I'll just quickly have a chat with him after.
What was the final question? We're done? Okay, we're done. So, there's another, what's the, okay, no.
So does Alt Bank, so does Stanbic, so does Providus, and so does VFD. Yeah, so ladies and gentlemen, they all stand. Move forward for a group photograph. Close the gaps. The photographer will shoot all of you. Aisha, please be in the middle. Blessed art thou amongst men. Ugodre Obichuku, please join us. Mr. Convener, kindly hold on for the convener to join us. You stand right beside the moderator. You can showcase your tags if you like. Aisha, you are a star girl. To your left, 3 men. To your right, 3 men. Nothing can happen to you. That is wealth creation. That is asset management. Thank you all. Thank you. Thank you very much. Put your hands together for them one more time. All right, ladies and gentlemen. All right, we're moving right on to the next one. Pensions, inheritance, the future of family wealth. Your dad is dead, your mom is dead, your dad is working hard, he has a lot of money in the banks, and sometimes you do not know. And when he passes away, you're left with, your iPad is there, Providence Bank. I'm right here, behind you. Mr. Chukuma, I'm right behind you. All right, the panelists are Mr. Rotimi Obende, who is the head private trust at First Trustees. And we have Mr. Wale Okunriboye, who is the chief investment officer at Access ARM. Please get on stage. We also have Yemisi Obitayo, who is vice president, business growth operations and partnership management at Awaba. That's a mouthful, wow. Vice president, business growth operations and partnership management at Awaba. Yemisi Obitayo, get on stage. Imoka Ayebe, Corporate Finance Director, Fitson Healthcare, leading pharmaceutical company in Nigeria. Ikorodu Road, Obanikoro, full stop, Lagos, comma. And the moderator of that panel will get on the stage last. So, Yemisi Ibitayo, Imokai Ayebai, and we're talking about inheritance. Some people live on inheritance. Some people live on the work that their great-grandfather has done, and that is what pays their school fees. Uwade is the moderator of the panel, and let the questioning begin. Thank you.
Thank you very much. Good afternoon, everyone. Good afternoon, my panelists. Great to be here. Ugo, I'm taking your position from this morning.
Okay, ladies and gentlemen, the hall is getting calmer and quiet, so can I kindly crave your indulgence that we please move forward. There's nobody sitting up in the seats in front of you. Please, let's move forward. Let's close the gaps if you can, please. Please, thank you very much. As you move forward, your business will move forward. You will make progress in your finances. You will not fail in your courses in school. You have no carryover. ASU will not delay you from graduating. Data will not finish on your phone. Petrol will not finish in your generator. Diesel will not finish in your generator. Your landlord will forget to ask for the rent. Your landlady will not disturb you. Your boss will not give you any query in the office. You will not need to spend money on medicals. Before you buy land, you will build house. Yes. They will mistakenly credit your account with millions of nairas and dollars. If you are doing runs, they will not catch you. Yes. Whether it's Yahoo Yahoo or Gmail. Don't do Yahoo Yahoo. All right, let's move forward. The Abatech, you will finish with the first class. Unilag, you will finish with the first class. Pan Atlantic University, you get a scholarship. Thank you very much.
Thank you, Jide. So, since there's a lady on this panel, I guess I'll start with the lady. Yemisi, the pension space is a space that has been over time more from what they call it. How can I forget this? From where this is horrible. Where everybody knows that, okay, this is where people are working, not from the formal sector, not from the informal sector. And over the last 2-3 years, what we've seen is a number of players within that space who are trying to bring a lot of the informal sector into it. And our bar is one of those organizations. How has that been, and how have we taken that into the position whereby they have become one of the registered pension managers from a retail scale?
Okay, thank you for the question. Moving away from what people usually know as a traditional pension that's for 9-to-5ers, I guess that's what you're trying to say. So what we have done at our bar is to take pensions to the people, to take pensions outside so that we can know that pensions are for everyone. It's not just for the 9-to-5ers, it's for the teachers, it's for the artisans, it's for the informal sector workers, it's for the market women, the traders, the road transport workers. So pensions is for everybody. The perspective that pension is just for those in the formal sector, people like you and I, that's what our bar is trying to change the narrative. And we have done this by ensuring that you can register for pensions at your fingertips. We have a mobile app for registration of pensions. You can register for pensions at any POS agent around you. And we have them all around us within 2 to 5 minutes walk from wherever you are. And pensions has also been simplified. Everyone sees pensions as making huge deposits at once. but it's about time and discipline, making smaller deposits as convenience. You know that traditionally, there's a certain amount that you earn monthly for the formal sector worker. But in the informal sector, it doesn't work that way. They earn as they sell, and the earnings are not static. So you can contribute as you earn. You can contribute 5 naira today, 10,000 tomorrow. As you earn, you can make contributions. It's as easy as that. Thank you.
Thank you. Wale, let me come over to you. And you've been in this space for a while. So with pension now about over 27 trillion for the average contributor who just, decides on their own, how do I tap into this kind of investment? What would you say, especially when you find out that, and when you realize that a lot of young people here who earn as they go, how do they contribute to that 27 trillion and create the next generation endowment and savings that they require?
Yeah, I think closing the pension gap, what I'll call a gap in Nigeria's economy, I think is very critical. Because the whole idea of pensions basically is you're trying to create a system whereby individuals, when they get to the end of their working life, have some savings to draw down on so they don't become like a drain on everyone else. And so that's why we have the pension system. But as it is today, or rather as was originally conceived, it largely applied to people within the formal sector. And in recent years, we realized that, I think the industry realized that, look, we are sort of hit a sort of a peak, and so the next frontier was basically to go into the informal sector. Work is being, disrupted, whereby the era of people having a 9-to-5 regular paid job, most people are now working for themselves, gig roles, and so basically with the whole flattening of the work environment with technology, what you find is that I don't need to be tied to one employer. So what the pension industry has done is to try and respond to the fact that the idea of work is changing. And so rather than tying everybody to an employer, we've said, okay, you know what, we'll have micro pension, or rather what we call personal pension plan now, whereby individuals can now on their own drive and sort of like lead the conversation around their pension, around their savings, and really take control of their own savings. And so working together with approved pension agents like BAR and also working with fintechs, other sectors within the financial space, the idea basically is to try and widen the coverage, because the more Nigerians you have who have a pension cover, the better it is for all of us. Having sort of like retirement security is a big thing, not just in Nigeria, but also globally. People say once people are getting older, the biggest fear they have is that their savings may not be able to tide them over for retirement. And I think that's one thing that drives us as well at Access Area, whereby we also believe in that mission, providing a financial security for everyone going forward. I don't know if that captures the point.
Well, I think it does, and then I'll come to you, Rotimi. One of the biggest things we see in Nigeria is, especially in the last few years, where there's so much stress and so much work, and then people just don't wake up, or people drive, and then they get somewhere, and then they don't, they just say, let me relax in the car, and I'm gone. Nobody thinks about, so what happens for those who I leave behind, and that's where you come in, trusteeship, wills, and planning, not just for you, but even for the generation that's coming after you. So what Nigerians don't even bother about wills, not to talk about creating a trust or an investment trust for their children. What would you say to that?
Okay, good afternoon, and thank you for the opportunity. And so there are a number of factors that have actually led to that. So number one would be religion. If I ask anybody who has thought what you think about wills, for example, the first thing that will come to your mind or that you will say is either I will not die or God forbid. And so because of that mindset, people do not want to hear about will writing or estate planning. But the fact is the fact, whether we like it or not. One day, all of us go park. But then what have you then left behind for those that are supposed to be your beneficiaries? Number two is misunderstanding. Many of us, especially men, and maybe a lot of us women, think that once I have filled a form and I have put next of kin there,
I have solved the problem of inheritance planning. I know women actually fight their husbands. Say, yes, I've been married to you for 15 years now. It's still your mother or your uncle or your brother that is next of kin. Not knowing that next of kin is actually a contact person. It is not your beneficiary. So misconception. And I'll say this because of time, that the fact also that many of us just assume that we are bringing up our children in the best possible ways and they will never fight over inheritances. I tell you, if you go and check, there are families that have been in court for close to 30, 40, 50 years, fighting over the assets left behind by their parents. Their parents never thought that their children would fight. Some of us think that if I'm married to one wife, I have 4 children, they will not fight. They will fight. As a matter of fact, there's a popular Lagos lawyer that passed about 30 years ago, had just one wife, 4 children. They've been in court for close to 30 years. There's also this family, he wanted to contest for presidency some years back, politician, very wealthy. If you follow Seun's podcast, you would have seen that one of his sons is also fighting his elder brother. Lack of planning, religion, culture. There's also culture. There are some cultures in Nigeria today, especially if you come from the East, that says that women will not or should not inherit. And so if you have 4 children and they're all females, I can bet you that uncles and aunties, nephews and cousins will take over your assets, whether they are businesses or properties. So what do we then suggest? Have an estate plan. Wills are not death sentences. If you write a will today, I promise you, you will not die in 50 years' time. You don't even need to say amen because it's the truth. So we need to change that culture. Now, apart from having a will, you also need a trust. Many people are trust fund babies. The difference between you and maybe myself is the fact that your granddad planned and had a trust in place, while my father or grandfather did not think about it. And so that's the difference between both of us. Some children are on lifetime scholarship. Their weddings have been taken care of. Their children's education have been taken care of. And that's because their parents or grandparents or great-grandparents had a trust in place. So I encourage every one of us to start to think estate planning and to actively work towards it.
Thank you very much. Imoha, let me come to you. And your space is very interesting, healthcare. And everybody just believes that it's only when I start to grow old that I need to start providing, in more details for healthcare. What can it be? Is it malaria or the best? And Nigeria has a very, very young population. How do Nigerians start to invest in their own personal healthcare and even in the healthcare sector towards building the needed infrastructure for that future?
Okay, thank you very much, and good afternoon, everyone. In terms of investing in healthcare, that would be giving out our own trade secret, so I'll skip that question and move on to the question about investing in the healthcare space. You talked about the growing population. To underscore the point you just made, the statistic is that by 2050, we'll be over 400 million people, so the 3rd largest country in the world. And that just presents a lot of opportunities, with diverse disease patterns, 400 million people. There will always be a need to provide healthcare, provide medicines, et cetera, et cetera. And what you're seeing is there's a lot of investment in our space, because it's becoming more attractive. The fundamentals are there. And the country will always need medicines. So it's a veritable opportunity, in my opinion, as a space to invest in. And over the long term as well, because, long-term investment tends to be more volatility. you know, the volatility impact is low, etc., etc. You know, you have more focus on the fundamentals. So it's a space that is interesting because the upside is there. You know, it's a defensive industry. It's an industry where, regardless of the economic times, you're always going to have people needing medicines. In good times, people will need medicines. In fact, they'll need a lot of medicines, you know, to keep up with the lifestyle. In bad times, people will need medicines, and so on and so forth. And if I use my company as an example of a player in the sector that is living what we're talking about. I was talking to somebody recently, two people actually recently. They bought our shares at 60 kobo many years ago. One person sold at 90 kobo and they tripled their money. There was a lot of excitement. Today, more than a decade after, you know, share price is over 100 naira. So, and that speaks to the fact that there is still that upside. We're at our infancy as an industry. We're still growing. So it's an interesting space, one that I think there's a lot of opportunities, and people need to take advantage of that. People in the Nigerian exchange group typically tend to invest in the banking stocks, etc., etc. But what we've noticed over the last 2-3 years is a shift from that, you know, to the real sector, to manufacturing. So I think I'll end there and say, you know, it's a space that...
So for you not just to end there, let me just stay with you.
Okay.
You know? We've seen the manufacturing sector over the last decade or 2 decades have just gone down. Factories are closing, warehouses are closing. Sometimes people are saying warehouses are turning into other warehouses that are creating new kinds of money. But as someone inside that sector, manufacturing is a risky investment. What do you think the turnaround story could be for people, young people, and because you mentioned something now about your company, 60 kobo a decade ago, 100 naira today. What do you think young people should look at and the fundamentals they should be looking at towards investing in that sector?
Okay, thank you very much. So manufacturing is a very interesting space. And there's a common joke. At the start of the year, you ask most business people in Nigeria, how is business? And the natural response is, oh, it's hard. By the end of the day, most people turn a profit or they make money. If you look at the average manufacturer, we're bedeviled with so many issues. You know, energy costs skyrocketing because, you know, you don't have the infrastructure for regular power. Cost of capital is high. And I can go on and on and on and on. But the average manufacturer, in the end, still turns a profit, right? So that tells you the opportunities that exist, that even with the issues, we're still able to thrive, you know, in an economy like ours. But coupled with the fact that there's a lot of focus now by the government on incentivizing manufacturers, particularly local manufacturers, on ensuring that the space is more cost competitive, on ensuring that, you know, they're able to help with the cost management or cost optimization. So for me, that space is, and I've talked about the upside, I think we still have a lot of headroom for growth. So to answer your question, yes, there were tough times, but it's like any industry. You know, we also saw banks that almost folded up, right? It's symptomatic of the times we're in. You know, but once you look at the fundamentals, and that's where the focus should be, you know, is this company growing? Is this company innovating? Is this company well managed? You know, you look at the board, the management, et cetera, you know, do your due diligence. Ultimately, it's a sector you can't ignore because it's the sector that will continue to cater to the masses, whether it's healthcare, whether it's food, you know, you name it. So, yeah, I just think that the potentials are enormous, and focusing on the fundamentals is critical for an investor. And we sat here today and listened to a lot of people talk about, you know, what they should be looking out for when they're investing. And if we take those lessons and apply it, you know, there are a lot of stocks in the manufacturing space that you can invest.
Okay, Rotimi, let me come back to you and just trying to piggyback on what he's just said. So taking it from that perspective, people own land, people own properties, people own stocks and all. And then bringing it back to the fact that at the end of the day, like you said, you die and you don't even know what to do. How does it move to the next generation or even to your spouse? So what are the simple ways when you look at it? So if I'd invested in Fitting, for instance, and then I pass on tomorrow, how does my family get access to those things? So what are the simple things that you can do towards creating those opportunities and those from a trustee perspective?
Okay, let me start from the more difficult ones. Real estate, people can see it. This one is your property. You have shares, people can see it. Imagine if you have cryptocurrencies. What then happens when you pass? Because for cryptocurrency, you are most likely the only person that knows your account and knows your password. You are most likely the only person that even knows you have that investment. Let me even stretch it a little bit. Social media accounts. A lot of us, maybe 50, 60% of the young guys in this room have one, either a YouTube channel, a TikTok channel, and those channels are making monies for you on a daily basis. Let me even talk about music. You've hit today and you have royalties that are going to be paid to you. You pass on without, or you pass out without any estate plan. It means that your family members will not get anything because in the first place they do not know. So what are the simple things we should do? Have a simple trust arrangement or have a simple will arrangement. What does that do to you? If it's a simple will, what are my assets? My social media account. What are my assets? My cryptocurrency. It then gives people an idea of the assets that you own. Then you then decide how are those assets going to be distributed, whether in terms of income. But more importantly, you also then decide who manages your account. So just go back 2-3 years ago, that popular comedian that many of us crowdfunded for when he was sick and passed away. Funny thing, 2 weeks after his death, maybe a week after his death, the wife, daughter, and son started fighting. And the daughter took ownership of the account. And it became a big issue, a big mess. To resolve all of that, have a simple will, a simple trust. Do not run away from it. Whether you are young, as long as you have started to make money, consciously sit down and ask yourself, if anything happens to me today, who takes over the royalties that I'm making? Who is able to operate my account? Let me even tell you something. And I hope that bankers are not here, even though I know they are here. Your family members will not have access to your bank account if you pass today and nobody knows. What you are doing is generating wealth for the shareholders because they will continue to use your funds. They will place it on, the account will become dormant after some time. What that means that they will not pay interest on that account, but they will be using that account to make money. But more importantly, to avoid crisis. For me, crisis is real, and that's because I have seen a situation where two wives are fighting over, I know you won't believe it, a black and white 32 inches television. Black and white 32 inches television. And that's because the man did not decide who he was going to give the 32 inches black and white television to. So fight is real, crisis is real. How do I resolve it? Have a simple will, a simple trust arrangement that settles distribution, that settles how and when you want your assets to be distributed and to pass to the next generation. Otherwise, all your labor will end with a financial institution who will make more money for shareholders. Thank you.
Let me come back to you before I go to Wale, because this next question, and so less than 8% of personal pensions accounts are actually funded. So why do you think so many Nigerians are not saving for retirement? And what is the organization doing differently to change that? Because when you consider the fact what Rotimi said now, are you with me? Some of these things can also play into that space. So what are you guys doing?
Unfortunately, the statistics is true, and it's due to three major factors. The first one is income volatility. The second one is access and awareness, and the third one is trust. For the first one, we know that it's perceived that everyone here earns a salary. If you do a poll here, I'm sure not about 60% of us here don't earn a salary. But, I mean, there's a perception that there should be a huge amount of pensions that can be contributed per month. So, the income volatility strikes that out. Secondly, access and awareness. A lot of people see pension something for the old, something that, oh, I can't access in the next 30, 20 years. And so a lot of people are not aware. They don't have the education of what the new pension phase involves. They don't know that as a student, you can start contributing pensions. They don't know that as a 5-year-old, you can start contributing pensions. So, I mean, a lot of things boil down to this. And second, the third one is trust. We know what has happened way back concerning pensions. Let's not go into that. So what we have done at our bar to counter this, we'll go with the first one, is to enable you to contribute as you earn. We will enable you to contribute as the normal Nigerian person earns, not like the monthly income that we expect you to have. Even as someone that earns monthly, you can contribute, put aside small amounts towards your savings requirement. And the second one, which is access and awareness, at Awaba, we have concentrated so much on financial education, financial literacy. We are not just preaching it, we are bodying it. I mean, last week we were in about 15 cities, taking the good news of pensions into places like Taraba, Gombe, where people literally don't even know that pension exists in the first place. So that's one of the things that we are doing. And the third one is trust. What we have done is that we have a mobile app that enables you have access to how your pensions is growing, how it's being invested, and you can access it every day. You can check your pensions every day, just like you check your account balance. So we've allowed you have the mobile app. We have a pen pay app that allows you to have access to checking your pensions every day. And another thing that we have done is that we have enabled individuals who can register as our agents to be able to register your friends, your families for pensions. And surprisingly, you can earn from it. You can earn as high as 6 digits from registering your sphere of influence for pensions. Thank you.
That's interesting. Wale, I'll come to you after this. With so much prospects, more people coming into that net, and pension fund organizations having access to be able to buy or invest in more stocks, should I be scared that this new money our buy is bringing in, we're not going to just put it into one stock and tomorrow it's no longer there? So what do you think we should be looking out for?
Okay, so thank you. So I think this year, one of the big things that has happened is the guidelines allow pension funds to invest in equities. And what I always try to tell people is it's not as if all your pensions are invested in risky investments. And the important thing is that pension funds were licensed and And so we typically, the license means that you hire professional staff, highly trained, highly experienced individuals, sort of look after your funds. And we carry we adopt a fiduciary position. So in other words, we're looking after those investments like a hen looks after her eggs. And the first principle we all adopt is the principle of risk management, which is that don't put all your eggs in one basket. So your pension portfolio is diversified. A chunk of it goes into what I call fixed income securities, which ensure that the capital can be preserved. There is no loss of principal is assured. And then a portion is also allowed for growth. And the reason is, although most people often worry about equities risk is something you can see. But the other thing you can't see is inflation. Inflation is something you can't see. And if you're trying to manage an investment, sort of protect yourself against inflation, one of the best asset class you can do that is equities. If you look at it in the last 5 years, for example, inflation has averaged between 20 to 30% each year. But if you look at the stock market performance over that period, it's done way better than that over that period as well. So if you're really trying to hedge yourself against inflation, the key asset class you want to be involved in is equities. But a lot of people are worried about equities because it can go up and come down. So volatility is something you can see. So the best way to mind that is by adopting a diversified approach, which, we have strong regulations which sort of define what you can invest in and how you can invest in them, and also limits around how you can expose your portfolio to equity. So we're very mindful of that. It's a measured, calculated way to invest in, and what it does is that it ensures that overall, your assets are safe. And I always say, if you look at the last 20 years of pension fund investing, the bigger risk to avoid is not so much the risk of loss, it's really the risk of inflation, which is something most people don't consciously see when they're looking at investment. They tend to focus on, will I lose money or will I not lose money? But you focus, the best portfolio is one that achieves a balance between both, between volatility and inflation. That's the kind of best portfolio. And I think the way we sort of think of it internally at Access is ARM is to try and get that balance right while still complying with regulation. Of course, there are other things that we can do better, but I think in terms of where we are today, in the last 1 year, last year, for example, our flagship fund, I can say we did way better than inflation last year. So for us, we think getting that balance right. So yes, equities are risky. Volatility is something you can see, but it's not as if you're gambling. You're picking the right investment. You're going about it in a very calculated way. And I think we're able to provide a balanced approach to investing that can ensure that clients can be rest assured that their pensions are to a large extent safe, both in terms of inflation and also risk of capital loss.
Thank you, Wale. And I'll stay with the panel for one round of questions, and then we'll take questions from the audience. And Wale, I'll stay back with you. With fintechs like our bar, and we saw fintechs come into the banking space, coming into the pension space, what kind of news is this for Nigeria, the average Nigerian? Is it good news? And how will that change the way people interact with their pension funds organization? Is really critical for this growth that you're looking at.
So as always, what I would say is that collaboration is always better than competition. Rather, I was thinking about it as we are competing. And the reason is because the way the conventional system is structured, you generally go after the formal sector employees. But for people who are in the informal sector, the cost to reach that sector is quite significant. And so sometimes collaboration helps because guys like our bar, who are approved pension agents, have sort of distribution, so they're able to go to areas where, because of the cost of serving those areas, maybe formal organizations may be a bit wary. And then, of course, with technology as well, you can also ensure that collaboration is better. If you look at the way it is today in the industry, we're actually collaborating. So the framework between people like our bar and the formal pension fund administrator is a collaborative one, whereby we are both working together to try and expand pension coverage, because the benefit of an expanded coverage, it works for everybody. Because if we think of it, the more Nigerians who have a pension account, the less people get into the less people who are getting older are worried about their retirement security. It's also if you look at the externalities for us as a country, it's way better. And I think that goal, thinking of it from that perspective for us, we think it's a big, it's more, it's better you have more people coming to a party than just you yourself trying to cook for just a few people. I think that's the way I try to think of it. Collaboration is better than competition.
Coming to you, so for a trader who earns like 100 to 200,000 on a monthly basis, pension savings might be like a luxury. So how do you make the case to someone like that so that he can actually save every month?
Okay, thank you. So someone who earns, that's broken down to about 5,000 naira a day. So we're trying to demystify the fact that you don't have to contribute lump sum at once. You can contribute as you earn it. Take, for example, you take 50 naira every day from your 5,000 naira earning or 100 naira from your 5,000 naira earning. By the time it accumulates in the month, that's about 3,000 naira. So the message you are trying to preach is that just contribute as you earn it, as you can afford to. It's not a must that you must contribute lump sum. And over time, it accumulates to become something meaningful for your retirement age. And what we're trying to do is also to break the cycle of the next generation having to inherit the retirement burden of the previous generation. I'm sure a lot of us, I mean, if I ask questions, have sent home a few naira from our earnings. We've calculated. It's not the end of the month yet, but we are calculating, I must send this to auntie this, I must send it to uncle that, or your parents. So if peradventure those parents had been contributing pensions in their active work life, it wouldn't be a burden on the next generation. So we're trying to tell this generation and everyone that does not have a retirement savings account that you can contribute as you earn, especially at somebody working in the informal sector. It's not a must that you must be in a structural 9-to-5 setting. Contribute as you earn. You can download the app and make contributions as convenient as it is for you. Thank you.
Thank you very much. Moha, let me come back to you. Interest rates are coming down. CBN just moved the MPR down by 50 basis points. In practical terms, what does that mean for companies we invest in, especially when you consider where they will be going to? Are they profitable? Should investors look at or expect better returns from this listed market, since yours is one of those in that market?
Thank you. To answer that question, I'll speak about finance cost for most manufacturing companies. On average, I put it to about 8-10%. Finance cost, 8 to 10% of revenue is what finance cost represents for a lot of manufacturing companies. So imagine if you're able to shave off that number. That naturally trickles down to the bottom line, and that's profit, higher earnings, possibly higher dividends. You can also look at it in another way by saying, with lower interest rates, you can borrow a bit more to grow your business, and more, higher growth means higher returns ultimately. So I think it's a win-win either way. You remember when I was answering the question earlier, I spoke about how expensive capital is for manufacturing companies. So anything off that interest that we pay as manufacturers can only be good for investors. I mean, for us as a business, we've just done a rights issue. Part of it is how can we restructure our balance sheet and ensure that we're not paying the banks significant amounts of finance costs. I mean, I know there are bankers here and they don't want to hear that, but the truth is, my job primarily as a finance person is to work for the investor, work for my shareholders. So, we've just done that restructuring. Ultimately, that will help us to put a bit more money in the business, either working capital, investing in capital expenditure to help grow, revenues ultimately grow earnings, which will be more money into the pocket of the investors?
Thank you very much. And Rotimi, coming to you. So I'll give you this last question, and then we'll go to the floor for some questions. New tax reforms are here. They're not coming, they are here, including changes to how we deal with inheritance and estate-related taxes. What should Nigerian families be looking at in terms of the new tax laws?
So I've heard this question like maybe like 100 times, if not more, this year. Okay, so not many things are changing, but at the same time, many things are changing. So number one thing that is not changing is if somebody passes without a trust, please note that without a trust, 10% of the total value of your assets goes to the state government. And that's before anyone in your family gain access to it. So try do your maths. You're worth 500 million. Government takes 10% of that. So that has not changed. But in case you are angry, let me just quickly say this. If you have assets outside Nigeria, UK, Canada, US, please note 40 to 60% goes to the government. So you should not be angry with Nigerian government. Now, what has changed? There are certain assets that previously, if you have them in your trust arrangement, you won't pay tax on them. Your trust does not pay tax previously. However, with the new tax law, if your trust makes 1 million, you will pay, if you are the one that is the settlor, you pay personal income tax. If you've created the trust as a company, you pay company income tax. That is what has changed. However, and I say this, the tax law recognizes that in computing tax, it is income minus expenses. It is not income alone. I don't know if I should say this so that my friends that are asset managers will not be angry. If you have your assets with fund managers, you generate 1 million. The tax is 1 million. If you have that same asset in a trust arrangement and your trust says, pay education, pay school fees for my children, take care of my father, take care of my mother's welfare, it's an expenses to the trust plus the trustee's fee. It is income minus expenses before it will be taxed. So those are some of the major changes that have taken place in the new tax law. But remember, inheritance tax, or what we call estate tax, is 10% of the value of your assets. You don't pay that if you have a trust. But if you have a will or if you don't have any plan at all, you pay that to the state government as probate tax. That one has not changed. It will not change.
Thank you.
Thank you.
Does anybody have any questions? Your daddy's dividend warrants. 1, 2, 3, 4. Your daddy, you want to tell him now to go and write a will or to make you a signatory to his account? So can I see those hands again? 1, 2, 3, 4. Thank you. In that order, make it very quick, please.
Good afternoon. All right, my question is for our bar. Okay, so there've been a lot of conversation in regards to money, right? But when I go to events and conferences, there are not so much conversation in regards to pension. It's always as if it is at the bottom of the pyramid. Now, when I talk to Gen Zs and millennials about pension, what they tell me is that pension is like a bad investment for them. Why should I have to, look at maybe 20 to 30 years, for instance, for a return that is not going to be beneficial, like the stock market, for instance, can return? And what I try to explain to them is that pension is not necessarily an investment. Think of it as a safety net, right? A cushion in case anything happens to you. Now, I want you to give me from your own perspective, how do you convince youth? Because I feel it's not just about, saving 10, 15 naira. People can do that, but I think there is this foundation that needs to be built in terms of what pension really is all about. Thank you.
Okay, so my question is this. First of all, I'm a Muslim, but how is that necessary? There is a way inheritance is expected to be shared as Muslims. So that's one. Secondly, how do you advise a 70-year-old man who has about maybe 3 kids who are not very good with finances? So how do they handle money? How do they handle the money that comes to them? Do you understand? So, you don't want to give them money that would harm them, so to speak. You want the money to help them. You want the money to probably get to your third generations too. So how do you manage that dichotomy? Simple.
All right, thank you very much. We can take one more.
Good afternoon. I am Oladejo Olushola Solomon. So my own question is for Mr. Rotimi. I am Oladejo Olushola Solomon. So my question is for Mr. Rotimi. I like the idea of creating a trust for kids' school fees. So I would like to ask, I know I'm still young, but how can I go about that?
Thank you. How can he go about creating a trust for his unborn children, Abby? Unborn.
My name is Simon. You spoke about a trust, and I know that, let's say I'm in 2025, I have a number of assets, and then when I get to 2026, my assets must have increased or maybe reduced. So how often should I update my trust? How often should it be done? Should it be 5 years or 10 years or something? And then how would the other assets that are not under the trust captured, maybe if something should eventually happen to the person? And my second question is to the fitting guy. Most of the healthcare companies that, okay, let me not say healthcare, okay, healthcare actually, that are on the exchange are basically pharmaceuticals and manufacturing companies. Why are there no hospitals? I know that many of our hospitals are underfunded. So why are there no hospitals coming to the capital market to get funds? Why are we not seeing any hospitals on the capital market? Thank you.
Thank you. Let the panelists respond.
Thank you. One of our goals at our bar is to demystify the misconception about pensions. And it's because there's not a lot of education on what pension really is in recent time and what your pensions can do for you. I'm not sure that person you were talking to knows that as a contributor, they can have access to their contingent pause in 3 months, as against 30 years, right? So part of what I'm sure, so what we need to do in pensions, to do a lot of financial literacy so that the young ones will know that there's lots more benefits in pensions than it was 20, 30 years ago as perceived by them. So our goal is to ensure that pension becomes a part of your daily financial culture and not what's far-fetched in 30 years' time. You can withdraw from your pension purse every 3 months. I'm sure he doesn't know. So these are some of the facts that you need to tell that person that pension, you cannot, it's not a must for you to wait for 20, 30 years to access part of your pensions. You can access it now. Thank you.
Yeah, just to add, I think another benefit for investing in pension, I think fallout of the tax reforms is that pension contributions are tax deductible. So if you're earning income or you're an entrepreneur or you're a salary earner, your pension contributions, any contributions you make towards your pension is tax deductible. So particularly for people who earn quite a lot, once you get above, I think there's a threshold, there's a tax threshold. If you look at the income threshold, your tax rate, effective tax rate becomes quite high. And so sometimes a way to sort of like manage that would be to increase your pension contributions so that at least you lock in that money away. And of course, if you keep your savings over a 5-year period, you get to withdraw it tax-free, entirely tax-free. So there are ways that you can optimize your I think one thing that everyone needs to start doing with the reforms to the tax system is that you need to start thinking about tax planning, managing your your taxes more proactively, because I think what the government is saying, I mean, it's what happens globally anyway. So individuals, as you get to and as you get towards the phase of your life where you're earning more, you also need to start actively planning your taxes. So one of the advantages of is tax planning. And as EMC said as well, you can also withdraw the contingency portion. And then beyond that as well, I think maybe to chip into someone as well, you can also save for your kids as well, for pensions as well. So these are ways to also think about it as well. And then there are benefits. If you lose your job or if you're unable to get income over a 4-month period, you have access to a portion of your pensions as sort of like unemployment benefit, just like a welfare benefit. And then of course, you can also use your pensions sort of like as part of your savings to pledge for equity to access mortgage loans as well. So you have schemes that are coming up. I think there's MRIF where you get interest rates of at least 9%. So you can also use your pension savings as well, sort of like as equity contribution to access mortgage loans to get yourself a home. So I think there are many benefits beyond thinking of just the return perspective as well. And there are other things that we're also working as well. Industry players sort of like ensure that our benefit contributors get more value as well. So thank you.
Okay, I don't want to look for Wale's trouble because he has said that you should invest for unborn children so that it doesn't waylay me outside. But let me start from Islamic estate planning. So yes, Islam provides a structure, and it's a very beautiful structure. Two-thirds of your wealth is planned already. Son gets half, daughter gets half of what the son gets, father gets a portion, mother gets a portion, brothers and sisters have portion. Two-thirds planned very well. But the mistake many Muslims then make is not to do anything at all, and it then creates a problem. So last year, a guy in Kano went to the mosque, padlocked and chained all the doors because his siblings and uncles that shared their father's property were inside the mosque praying, and he put fire, burnt the mosque, petrol, burnt the mosque. Why? Because he felt like the inheritance was not shared in accordance with Islamic dictate. Two-thirds, you can't do anything about it as a Muslim. However, the Quran then provides that you can do anything you like with your one-third. So what should a Muslim be doing? Have an awasiya that takes care of the two-thirds. An awasiya basically helps with identifying your assets. So you just list all your assets. You cannot do anything with the distribution, but you will list all of your assets. And when something then happens, the Sharia professionals, the scholars, they will then distribute that two-thirds in accordance with the law. However, your one-third, you have freedom, you have the liberty to do anything that you like. What are some of the things you can do? Number one, your dad gave birth to you as a Muslim. You wake up one day and you say you want to become a Christian. Ordinarily, it should not be a bad thing. But as a Christian, you cannot inherit. You marry a Christian wife, you love her so much. Out of the millions of women in the world, you picked her, but she's a Christian. She will not get anything. That is why it is important to now, that one-third should just be for those people. Those people you love, that you know will not get anything from the two-third. Take care of them very well in the one-third, because the Quran allows it and provides for it. What should you then do with the one-third? Create a trust, which then takes me to your second question. I'm a 70-year-old man. I have 3 kids. I am not sure how those 3 kids will manage the assets that I leave for them. I will create incentives. I will put incentives in my trust. What are some of the incentives that I can put? They've gone to school. If you come up with a first class, I'll give you 5 million or 10 million. It depends on my magnanimity. When you don't need to bother yourself. I've taken care of your wedding. Where do you want to wed? Bahamas, Dubai. It's taken care of. Those are incentives you can put.
You can also then give them monthly stipends. Every month they get an allowance. What is even more important, you can tell the trustee, if you mistakenly hear that any of them are involved in drugs, just carry the person to a medical center, conduct a test. If they find out that he's taking drugs, remove him from as a beneficiary of the trust. So you can set incentives. As a 70-year-old man, I don't need to bother myself. I'll create a trust, put those parameters, I'll leave the burden to the trustee. Guy, you cannot mismanage what you don't have. You are only a beneficiary. You are not the owner. So it's what I give to you that you can possibly enjoy. How can I create a trust? Sorry for the unborn children. Yes, so what the good thing about a trust is that it comes with a document known as a trust deed. It's the legal agreement between you and the trustee. So as you create the trust today, it's created for unborn children. As you start to give birth to them, please make sure that you inform the trustee, present the birth certificate, because what is most likely going to happen is that if something then happens to you, the unborn child will not get anything because you have not specified. So as you begin to have children, you start to include them in the trust arrangement. They just come to enjoy benefits. Again, and that's because you have an arrangement in place, a legal arrangement in place where the trustee cannot steal your money. And there's nothing like a dormant account with a trust arrangement. Finally, how often should I update my trust account? Guy, you cannot even update it every day. You cannot update it every week. You cannot update it every month. Because there's the danger of somebody waking up one day and say that guy was not of a sound mind. He was insane at the point, because there's been too many frequent updates. Same thing with your will. So what's my recommendation or our recommendation? Update when significant events happen. What are significant events? You currently have one wife. You want to add a second wife to it. It's very significant. You update. You have 2 kids. God blesses you. You now have 2. People that are not beneficiaries of the trust will never ever enjoy benefits. Let me close with this. Michael Jackson. As at the time Michael Jackson passed, he had a trust. His 3 children were beneficiaries. His wife was the trust protector. So somebody to make sure that the trust works. And as the trust protector and guardian, she was responsible for taking care of the children. So if they need anything, she's the one that needs it. She will take care of herself as she's taking care of them. Unfortunately, Michael Jackson did not name his father as a beneficiary of his trust arrangement. That guy went to court 3 times before he died. Those 3 times, the court said to him, "We are sorry, you are not a beneficiary of the trust." And unfortunately, Michael Jackson's mother did not love the father well enough to now include him as a beneficiary. So make sure you update your trust arrangements when significant events happen. Thank you.
Imran, over to you for the last question.
Yeah, I'll try and keep it short. So, personally, I think one of the reasons you don't have hospitals, which I think you referred to specifically, is more of the entry barrier. So you think about the requirements for listing, right? There are minimum requirements you have to meet. You look at pharmaceutical companies that have invested, in machinery, invested in equipment to produce medicines, etc., etc. You won't invest as a founder. You won't invest that kind of money without putting certain things in place. So I think historically what has happened is that some of these guys have met the minimum requirements and been able to, list by so doing. Listing is a personal choice, of the founder of the entity, So, but I think that as we move forward, because you are having a lot of institutional investors in the medical space, private equity firms investing in hospitals, etc., etc., at some point they will exit, and I think that then opens up the opportunity to potentially list, if that is the option they want to take, or perhaps exit to a larger pool of investors. So I think it's inevitable we will see it, but personally, I think it comes from the entry barrier. You can open a hospital, well, a clinic, maybe not a hospital. You can open a clinic in this room. All you need is the technical capacity of the doctor. You know, you can't open a pharmaceutical company in here because there are minimum requirements you have to meet to set up shop. And I think that's what's helped pharmaceutical companies historically to be able to list.
Thank you very much, everyone. Rotimi, thank you for the enlightenment. Wale, it means that I should go and contribute more pension. So I should be looking at buying new stocks from you. And let me see, thank you, our bar, for telling the young people and the next generation that it's important for us to save, not because of tomorrow, but because it's an endowment that will help us. Over to you, Jide. Thank you very much, everyone.
So, don't wait until you're 40 before you start thinking about a will. Don't wait until you're 50 before you start thinking about a trust. Don't wait until you're 70 before you start thinking about pensions. And don't wait until you're old before you start getting a HMO or whatever. You put your hands together for our panelists as they stand for a group photograph. Ugo Dre, the convener, will join them. Right after the photograph, we will make a presentation to each of them. Ugo, please stand in the middle. Yemisi, please join him in the middle. As the balancing act. Yes, stand right next to Ugo Dre. Please join them. Everybody say pension. Everybody say write a will. Everybody say next of kin. No, they inherit. Everybody say beneficiaries. Everybody say trustees. Everybody say pensions. Everybody go and sit down. All right, so we have a presentation to each of them. The first is to Yemisi Ubitayo. Thank you, Yemisi. Gentlemen, please, can we give some space? Please move. Okay, thank you. Thank you, Yemisi Ubitayo, for the pension gist. This is for Wale Okunriboye. Wale Okunriboye. Okunriboye, sorry. I'm sorry, I wasn't. Okunriboye, Imoka Ayebae. Investivo. We're taking a 3-minute information session from Investivo. Can we have the representative of Investivo? And Rotimi Obend E. Rotimi Obend E from First Trustees. So you heard everything about the trust. When you have a new child, update the trust. If you marry a new wife, update the trust. If you give birth to triplets, update the trust. You buy a new house, update the trust. Thank you. Thank you very much, Mr. Ugodre. Investible. Your raffle ticket. Everybody has a raffle ticket. Please raise it up now. Can we have the pot of the raffle ticket? We're taking it right after Investibles. Your 2 minutes starts now.
Good afternoon, everyone. Quickly, Investizo is a CFD broker, and what we do, CFD is also known as contracts for difference. Just like you have your ETFs, CFDs are basically you trading assets that you don't own. So, for example, if you're trading gold or trading crude oil, you don't own the crude oil or the gold you trade, but you can trade the price movement of crude oil. So it's the same concept that happens when you trade stocks, when you have to understand what's happening with the financials of a company, or understand what's happening in the global markets, what's happening with US and Iran that affects crude oil. Same thing happens, and you are able to make money with that understanding. So Investizo is that broker you can use to trade that market. And one of the things that we are doing at this event is that we are giving out an iPhone 17, $1,000 and $500 to those who trade consistently with us. So you can get to our booths and simply scan the competition, the raffle draw code to be a part of it. So also attendees of this event also have access to free education if you want to understand the components of how stocks appreciate or depreciate per time, whether it is through purely technical analysis, you want to be able to read a chart and understand, okay, this is how your stocks will move up or down per time, or want to understand what the fundamentals says. How do you use the company financials to understand the movement of your assets? Or how do you use what's happening with, for example, US data? What's unemployment figures? What do they mean for your instruments? These are the things that we will teach you for free if you register with us. So if you're interested, you can get to the back and scan from our booth to get access to the raffle draw, and also write your name down to have access to the free education that we are offering in terms of being able to trade properly and understanding instruments and how they move. Thank you very much.
Investible, a trading platform for what? Good. All right. Are we ready? Are you ready? Tell me one thing you have learned today. Madam, you. Tell me one thing you have learned today. Yes, I came to this event because of you. Tell me one thing of all the English you've been speaking to this morning. Okay, I'm coming to you. Don't dodge me. You learned more about pension. What did you learn more about pension? Okay, your mentality about pension has changed. Okay. Okay, you copied notes. So, ladies and gentlemen, put your hands together for this man. He wrote a lot. Wow. You are a dutiful student. You're the type of guy that when the lecturer coughs in class, you write. Madam, apart from crossing your leg and doing shakara, what did you learn today? Tell me one thing you learned. Can we have the pot of raffle tickets? Tell me what you learned. Yes.
I learned that you should always update your trust. When you have new children, update. When you have...
But you also said something about marriage. When you marry a second wife, like you now, if you marry a second husband, you marry a second husband, I will report you. Please, can we have the pots? Raffle time. It's a raffle moment. All right, we're picking. The first winner is... The ticket is 000. Mr. Ugo Dre will do us the honors of picking the very first one. UGO Dre, you shall pick the first raffle ticket. The first raffle ticket. The first raffle ticket is for a Oga, you have to be impartial. You can see that it is free and fair. All right. Oh yeah, Oga, pick now. Your shakara is too much. You are just dribbling and dribbling. You want to give somebody high blood pressure. The winning ticket is 0428. 0428. Going. We're setting the rules. By the time we say going 5 times, the person is not here. 0428. 0428. 0428. Village people call that person away from here. 0428. Once we drop it, you can't get it anymore. 0428, gone. Sorry, too late. Wow. Okay, this one. If your ticket has 3 zeros, raise up your hand first of all, before I call the final number. If your ticket has 3 zeros, 0003. Is that you? Oh, sugar. Abi, are my eyes deceiving me? This is 3 now. 0003. Going. Madam, were you sleeping? You see the people we are talking about? You're sorry. No, sorry, this is wrong. 0003. Your ballot paper is faulty. It's not. We're sorry. No, we could just hold it. We can call you back. Yeah, we can call you back. Okay, we can call you back. Sorry, no rigging. Your IREV is not working. All right. Don't go yet. 0013. 0013. Going. 1. Going. 2. Going. 3. Going. Where are these people? Now don't go out. All right, this one is straight to the point. This person must be here. 0022. Okay, will you raise? Could you put down your hand? This one. Why is it now that you are stretching? 0022. Okay, are you the person? You know your number off head, even without looking. 0022. This man don't cram into it. Ladies and gentlemen, we have a winner. Our very first winner for the day. And he wins a humidifier. Good. So when you put it in your room, it's going to suck up all the dew and the moisture in your room. Mr. Ugodre, please pick the next one. It is a pressing iron. You go iron tire. So you have no excuse. You have no excuse to wear rough clothing. The ticket is 0162. We got a winner. 0162. Okay, yeah, you look like you will like ironing. This is your shirt. You will iron it when next they are coming. 0162. He wins a pressing iron. Let us look at it. 0162. Please present the iron to him. Iron man. Okay, you go iron. Go and start a dry cleaning business. Sharply. Or ironing business. Mr. Ugo Dre, you pick the next ticket. No, wait. Can we have a representative of United Capital to help us pick the next one? United Capital. Can we have a representative of Providus Bank also? United Capital to pick the next one. Providus Bank, please be on standby. You'll pick the next one. Please help us pick. Thank you. Providus Bank. Thank you very much. 0429. 0429. Going. Gone. Please pick another one. Can we have a representative of Providus Bank? Crockstone, First Ally, please be on standby. We need you to help us to pick 0185. 0185, going. 0185, going. 0185, going. We found a winner! 0185, what does he win? What is he winning? You go blend, you go tire. Okay, it's a big grind pepper. Do you make smoothie? Do you like juices? You go learn. Hold on, make we see the ticket first. Make we see him say he correct. 0185, and that's correct. He wins a blender. Thank you, United Capital. Please, can we have Providus Bank, Crockstone, Leadway, Anybody from any of those companies? Okay, Sterling Bank, First Ally. Where is everybody? First Ally, Leadway. Leadway, can we have a representative from Leadway? Okay, Mr. Daya Luko. Who's Mr. Daya Luko, please? Mr. Daya Luko, please help us speak. Can we have somebody from Sterling Bank? Please, can we have somebody from Sterling Bank? 0436. Are you Sterling Bank? Okay, Providence, hold on, just hold on. We are calling you since you were not here. You have to hold on. 0436. 0436. 0436. Going. Gone. 0436. 0425. 0425. 0425. 0425. What is it winning? Humidifier. You are going to remove all the moisture in your room. 0425. Let's be sure. That's correct. That's correct. That's correct. Thank you very much. Congratulations. Can we have Providence Bank? Providence Bank, please. Please help us pick one quickly. Very quick. Thank you. This one is for microwave. 0412. Boscon Microwave. 0412. 0412. 0412. Providence, please bring another one. Please, can we have a representative from First Ally? Ready on standby. 0010. 0010. 2. 0010. 3. 0010. 4. For the last time. 0010. Providence, let's pick another one. We still got a lot of gifts here. Wow, now no one win. All right. 0147. 1. Oh, your number is 0418, Abi. Minus the 1. Just minus them quickly. 0417. 0417. 0417. Bouncer, you have a ticket? Is that you? 0417. Are you the one? This is already work out like say you're not sure. 0417. Are you sure you didn't pick this ticket on the floor? Ladies and gentlemen, he wins a microwave. Wait. Okay, who are you going to use it for? All right, thank you. Sterling Bank, First Ally. Thank you. Thank you very much. Next, Leadway. Please do us the honors quickly. Pick one, and can we have a representative from Momo? 0423. 0423. 0423. 0423. 0423. Nope. All right, madam, you pick again. This person is winning a wireless speaker with wireless charging. 0360. Hey, what is it? Hey, what? Hey, what? Where are you coming from? Yes, okay. No, you have rigged the election. Sorry, you are disqualified because you went past the post. Sorry, he's disqualified. What? I go run from outside. It looks like he came for the other event, safe. Because the way we were running. Wait. Let's check your ticket first. Because you look like somebody that went to print this thing from Business Center. 0360. Can we have it? Thank you very much. 0360. Thank you very much. Leadway, you can go. First Ally, Sterling Bank, Crockstone. Which one are you, Toga? Okay, Crockstone, please pick the next one very quickly. Can we have somebody from Airpeace? Can we have somebody from First Trustees, First Bank? This ticket is 0438. 0438. 0438. You are here. See the way he got upset, bouncing like a baby. I mean, I don't need to make noise. God, let's get to. Okay? Do you drink coffee? Huh? You try your best. You want to learn how to drink coffee. 0433. Okay, this is your ticket. Cut to. Wait. If I say you read this. All right, thank you. Next ticket. Can we have somebody from Momo, Zenith Bank? Yeah, Crockstone, please speak again. Anybody from Airpeace? Anybody from Alt Bank? 0323. 0323. 0323. 0323. Can we have somebody from Investivo or First Ally? 0323. Going, gone. Please pick another one. First Ally, Investivo. Any representative? Momo. Piggyverse. 0073. 0073. 0073. We have a winner. 0073. Let's see the ticket. You're winning a watch for that babe that you have been eyeing, okay? 00. You want to run away because you don't want them to record it so that your wife will not see it. That other lady that you have been eyeing, you win a watch for her. Mr. All right. Thank you. All right, thank you. Michael Amobi, please do us the honors to pick the next ticket. Thank you. It's okay. You can go to your seats now. Okay? You don't do now. Thank you. Michael Amobi, please speak. Do we have a representative from SEC? NGX to please help us to pick a ticket. Okay, hey, easy. You don't start. 0032. 0032. 0032. Going. 0032. Going. Gone. Michael Amobi, please pick another one. Do we have a representative from 0121? 0121. Can we have a representative from FIDSIN? 0121. 0121. Going. Gone. Thank you. Mr. Amobi, please pick another one. Do we have a representative from FIDSIN? FIDSIN Pharmaceuticals? 0305. Sorry, it's gone. I'm very sorry. Madam, which one are you? 0305. No? I said 0305. You won't use that for us. 0305. Okay, you sit down there, you allow babe come. I said therefore chance you. Come on, please let's look at your ticket. But what were you doing all the while? 0305. That's it. Please give him a humidifier. 0305. Can we have a representative from FIDSIN? Momo. Oh, FIDSIN is here. All right. FIDSIN, you're picking the next raffle. Mr. Amobi, you can take your seat. Please pick a ticket for us. Momo. 0226. 0226. 0226. 0226. Going. Gone. FIDSIN, let's pick another one. Do we have a representative from First Ally? Do we have somebody from Echo Bank? Echo Bank, the Pan-African Bank. 0067. 0067. 0067. Okay, are you representing Fitzin or you are a ticket winner? 0067. Wait. Echo Bank, be calming down, please. We just want you here. Please, stand on that side. Which one are you? 0067. Madam, please, can you stand here? All right, that's the winner. 0067. Now boil your way to fame. Thank you very much. Echo Bank. Okay. Echo Bank, please, Fitzin, thank you. Echo Bank, please pick a ticket. Echo Bank, please speak. We have about 5 prizes to go. Echo Bank, the Pan-Africa Bank picks 0306. 0306, going. 0306, going. 0306, gone. Please pick another one, Echo Bank. Zero 023. Alaja. 0023. Ramadan is done. You are launching this watch on Saturday. When you are going to the mosque, just wear it. Oga. Congratulations. Your fasting has not been in vain. Oh, thank you very much. Thank you very much, Echo Bank. Mr. OBDK, please do us the honors of picking the next winner. It is another watch, Mr. Obi Dyke. Drum roll. 0046. 0046. There she is. You win another watch. In the spirit, you have been fasting in the spirit of Lent. Oh, congratulations. What God cannot do. Thank you. 0046, correct? That's the winner. Congratulations. But will it size you? If it won't size you, we can. Thank you very much, Mr. OBDK. You picked the winner. Can we have somebody from Fitzin? Okay, all right. Fitzin, First Ally, UBA, Guinness, and UAC, please. Can we have somebody from Guinness and UAC? This winning ticket is 0321. 0321. 0321. 0321. Going. 0321. Can we have somebody from Awaba? 0321. 0321. Gone. Mr. Obi Dyke, please pick another one. Zero 0171. 0171. How are you dancing? 0171 0171 0171 0171. Going. Gone. Mr. Obi Dyke, please pick another one. Can we have somebody from SEC or NGX? 0026. Investivo. Can we have somebody from it? 0026. Madam, you are from where? 0026. 0026. Investivo, please stand aside for now, please. Thank you. Please step to the left a bit. All right, take your moment in the spotlight. What is she winning? A blender. You know, go to grind pepper again. No? You just press button. All right. Thank you very much, Mr. OBDK. Thank you for your time. Awaba, come and pick. Awaba, Ewabawawa. Awaba, Ewabawawa, kine. That's that down. All right. Okay. Your own is to pick. My own is to read. So wait. 0053. 0053. 0053. Going. 0053. You are 55. Add 2 to it. Is it? 00. Please, Awaba. Awa mi jadi. Awaba. Is it table? What's that? 2. No, we already have Awaba here. Okay, so this one is a gas cooker, 2 burners. Don't worry, we already have an Awaba here. 0134. 0134. Somebody must go home with this. Tabletop, gas cooker, double burner. 0134. Going, gone. Okay, ewa ba wa mi. You go wale ni, ewa jadi leni, ema wa wina jadi leni. Ibe leni na waba. Ama wa yin. 0215. Please, can we have Grand Exploits to help us speak a ticket? 0215. Why are you people laughing there? Is there a winner there? Eh? Open win, go win. 0215. Okay, are you 021? I will remove the 5. 0215, going. Okay, you still have to pick. You must pick a winner. You are not going anywhere. His name is Awaba. 0215. 0217. 0217. We have a winner. Finally, Awaba can go down now. Wait, Awa, come and present. Come and present first before you go. Are you sure it's 0215? Okay? 0217. You want to change out. Okay, go ahead. It's a winner. 0217 gas cooker. And you look like a bachelor. So it has helped you. When madam, please move to the left a bit. Yes. So when madam comes, just tell her you bought it for her in the spirit of International Women's Month. Don't tell her you want it to. Let her know that you spent money to make things easy for her. Investible. This is a standing fan. Is it standing fan or standing fan? 18 inches. This one will blow you to sleep. It will blow you away, sir. 0081. Hey! Oh, no, do. 0081. Do we have a winner? Why did you A? Okay. No, even you said. Because he taught you. 0018. 0081. Sorry. 0081. But this fan will blow you away. No, we have to on the fan here. If they put 0081, she wins. Investible, please present. Let's look at the ticket before 0081. Correct. Congratulations to you. And the final ticket. Do we have Grand Exploit here? Do we have Momo? Do we have SEC? Do you have First Bank, First Trustees? All right. To wrap it all up. Ugodre Obichuku will do us the final. Do you have anyone from Union Bank? Hold on. Union Bank? Union Bank is gone. So Mr. Ugodre Obichuku. Is the family that came? Okay, correct. This is a phone. It's Galaxy iPhone. Galaxy iPhone A17. The way you are looking, your eyes want to enter this phone. You better look here. If you look away from your future phone, but I take. Don't go. The number is, it starts with 0 and it ends with 0. It starts with 0 and it ends with 0. So if your number does not start or end with 0, just cancel yourself out. 0330. Why are you saying ha? Your number does not start with 0, it doesn't end with 0. I should go on. Okay. They don't even want to waste time. Okay, I'll quickly pick another one before they start stoning me. The people that are here, phone don't cost. 0040. You are 0039. Add 1 to it. You are 49. It looks like 9. 0040. You don't win anything. 0011. Absent. I should continue. But wait, she's here! Oh my God! She waited! Really? Madam, wait, now we're supposed to win this phone, no? Wait, let me check the number first. Wait, I said 0011. Your number is 0001. 00. She's the winner, ladies and gentlemen. Please put your hands together for her. Galaxy A17. Ladies and gentlemen, you've been a fantastic audience. Tomorrow, see you nice, bright, and early. And there's going to be a lot more tomorrow. There are going to be 3 sessions of the raffle tomorrow. So if you came early today, come early tomorrow. The tickets will be shared whilst people are seated, and the raffle will bring the event to a close. You've been a fantastic audience. See you tomorrow. I'm sure you've learned a thing or two. If you didn't win today, you can win tomorrow. And if you won today, you can still win tomorrow. Please put your hands together for NAIRAMETRICS, for Providus Bank.